In this video, I'm going to walk you through a simple, realistic beginner portfolio for IBKR this year. One you can actually stick with, no day trading, no margin, no overthinking. We'll use a few real pages from IBKR so you understand why this portfolio works here, and just as importantly, what you can ignore for now. I'm Erin from Your Money Friend. Let's get into it. What a beginner portfolio actually means on IBKR. Before we talk about percentages or ETFs, I want to pause for a second and reset expectations because this is where a lot of people go wrong with IBKR. A beginner portfolio on IBKR is not about squeezing out every possible return. It's not about being optimal, and it's definitely not about proving that you know what you're doing. It's about building something that's easy to understand, easy to manage, and very hard to mess up emotionally. That matters more on IBKR than on almost any other platform because IBKR does not protect you from complexity. It doesn't slow you down, it doesn't nudge you, or warn you when you're about to overdo it. It assumes that if you're here, you're comfortable making your own decisions. So instead of relying on the platform to create guardrails for you, the portfolio itself has to do that job. When I say beginner portfolio on IBKR, I mean something that does three very specific things. First, it's diversified, but not cluttered. You're spreading risks, but you're not holding so many things that you can't keep track of why you own them. Second, it requires very few decisions after it's set up. You shouldn't have to log in and think, what do I do today? Most of the time, the answer should be nothing. And third, it works with IBKR's strength, not against them. IBKR is built for efficiency, low cost, and long-term holding. A beginner portfolio should lean into that instead of fighting it. That usually means fewer holdings, longer holding periods, and very clear rules about what you're doing and what you're not doing just yet. If your portfolio feels stressful, confusing, or like it needs constant attention, that's not a you problem. That's a sign the structure is too complicated for where you are right now. Why simple portfolios work so well on IBKR. Now this next part is really important because it explains why simplicity works so well specifically on IBKR. Go ahead and click the link below so you're looking at the same page I am. When you land on this page, the first thing you notice is pricing. Low commissions, in some cases $0 commissions on stock and ETFs. Everything on this page is designed to make the platform feel efficient and professional, and that's true. IBKR is very low cost, but here's the part most people don't realize when they first see this. Low costs are not an invitation to trade more. They're an invitation to not be punished for staying invested. IBKR is designed to be efficient when you do trade, but it does not encourage you to trade often. There are no pop-ups telling you to act, no streaks, no notifications pushing you to buy or sell. There's no gamification at all. The platform is completely neutral. That means IBKR works best when you bring the discipline, not when you rely on the app to guide you. And that's exactly why simple portfolios work so well here. When your portfolio is built around broad ETFs and long holding periods, the low costs support what you're already trying to do. You're holding assets, you're staying invested, you're letting time do the heavy lifting. If instead you bring a complicated or overly active strategy into IBKR, the low costs can actually make things worse. Trading feels cheap, clicking feels harmless, and before you realize it, you're making way more decisions than you plan to. That's why beginner portfolios on IBKR should be simple by design. You're using the platform's low fees to stay consistent, not to stay busy. This is the foundation for everything else we're going to talk about. Once you understand that IBKR rewards patience and structure, the rest of the portfolio choices start to make a lot more sense. The core beginner portfolio structure. Now that we've talked about why simplicity matters on IBKR, let's talk about what that looks like in a real portfolio. I want to be very clear before I go into this. This is not personalized advice. It's a clean framework. Think of it as a starting point that makes sense for most beginners this year, especially on a platform like IBKR. A beginner portfolio on IBKR doesn't need a lot of moving parts. It needs a few pieces that each have a clear job. At At the core, most beginner portfolios are built around broad exposure. That usually means about 60 to 70% in a broad US stock ETF. This is your main growth engine. Instead of trying to pick individual stocks or guess which companies will outperform, you're owning a wide slice of the US market all at once. It's simple, diversified, and it does most of the heavy lifting over time. Then you add international exposure. Around 20 to 30% in an international stock ETF gives you access to growth outside the US without having to make extra decisions. You're not betting on one country or one region. You're just acknowledging that the global economy doesn't stop at US borders. After that, bonds become optional. 0 to 20% in bonds or a bond ETF, depending on how you personally handle risk. This part isn't about growth or excitement, it's about stability. Bonds can help smooth out the ride so you're less likely to panic when stocks move around. And then there's cash. Yes, cash is part of the portfolio, usually around 5 to 10%. Not because you're timing the market and not because you're scared to invest, but because cash gives you flexibility. It gives you room to add money without that additional stress, and it keeps you from feeling fully locked in at all times. On IBKR especially, cash doesn't just sit there doing nothing, which we'll talk about later. What matters here isn't the exact percentages. You don't need to get this perfect. What matters is the structure. Each piece has a job. Nothing overlaps. Nothing is competing with everything else. You're not trying to be clever. You're trying to be consistent. A portfolio like this is easy to understand, easy to explain, and easy to stick with. And on IBKR, that's exactly what you want. Why cash is not a mistake on IBKR. Now what I want to do is let's look at IBKR's interest rates page. Just go to pricing, then click interest rates. On IBKR, idle cash can earn interest depending on your balance. That means keeping some cash isn't the same as doing nothing. For beginners, cash does a few important things. It reduces pressure to time the market. It gives you flexibility if opportunities come up, and it lowers the urge to overtrade. A beginner portfolio doesn't need to be fully invested at all times, especially on IBKR where the platform won't hold your hand if emotions take over. Cash is not wasted here, it's intentional. What you should not add to a beginner portfolio. Now, I want to talk about something that's just as important as what you do include in a beginner portfolio, and that's what you intentionally leave out. If you've spent any time on IBKR, you've probably noticed that it shows a lot of additional features. Things like stock yield enhancement, margin tools, advanced income strategies, and all kinds of options that sound productive or sophisticated. These features are real, they exist for a reason, and they are not part of a beginner portfolio. You don't need margin. Borrowing money to invest adds risk and complexity, and it makes emotional decisions much harder to manage. You do not need leveraged ETFs. These are designed for short-term strategies and daily movements, not long-term holding. You don't need complex income strategies. Chasing yield early on often creates more stress than stability. And you definitely don't need to be constantly rebalancing or tweaking things. Doing more does not mean you're doing better. One of the most important skills you build as an investor is knowing what to ignore. A beginner portfolio is strong because it's boring on purpose. It's not trying to impress anyone. It's trying to be something you can stick with through good markets and bad ones without second guessing yourself. On IBKR especially, restraint is a feature. The platform gives you access to almost everything, but a good beginner portfolio uses very little of it. That's not a limitation, that's the point. How often to invest? This matters more than asset choice. So one of the biggest reasons beginner portfolios fail isn't the assets, it's inconsistency. On IBKR, you want a very simple rhythm. Invest money when you add new money, rebalance once or twice a year at most, Do nothing the rest of the time. And that's it. IBKR rewards patience. It punishes emotional clicking. If you find yourself logging in every day, the portfolio isn't the problem, the structure is. What this portfolio is designed to do. So let's be really clear about what this kind of portfolio is actually built for. It's designed to grow over time. It's designed to survive bad markets without you panicking. And it's designed to require very little decision making once it's set up. That last part matters more than people think. This portfolio is not designed to beat the market every single year. It is not designed to make investing feel exciting or give you something to watch every day. And it's definitely not designed to impress anyone on the internet. And honestly, that's exactly why it works. The goal here isn't excitement, it's staying invested long enough for the math to actually work in your favor. When things are simple, you are less likely to mess with them, and when you don't mess with them, you give yourself a much better chance of success. This kind of portfolio is about peace of mind first. Growth comes from consistency, not constant action. If you're building your first portfolio on IBKR this year, the biggest thing to remember is this. Simple works. You don't need a lot of assets, constant trades, or advanced features to do well. You need a structure that makes sense to you and that you can stick with even when markets get uncomfortable. IBKR gives you a lot of power, but that power is about choice. And as a beginner, choosing less is usually the smartest move. If this helped you feel more confident building a portfolio on IBKR, let me know. And if you want a follow-up where I walk through how to actually buy this step by step inside the platform, leave a comment and tell me. I'm Erin from Your Money Friend. Thank you guys so much for watching, and I'll see you in the next one.